Hello everyone, welcome to another section. As you all know, we share our view of the market, what have been working and what will still be working. I'm going to talk about something very, very important, how I place my stop loss and how I trade. This is what will lead us into invalidation zones and protected highs and protected lows. This is personally how I trade. This is not a financial advice. After this video, you can go ahead to make your research. If you have more questions to ask, you can drop it in the comment section. Now, let's talk about invalidation zones and your protected highs and protected lows. A lot of traders enter the market without knowing where they are wrong and when they are right. And this is very, very dangerous as a trader or even as a beginner trader. Before you enter any trade, you need to define your risks. You need to define your invalidation zone and your protected highs and your protected lows. Sometimes you can see that traders, sometimes they get stopped out of the market before price starts moving to their direction, which might cause some emotional traumas and psychological issues and affect the way you trade in the long run. Now, let's talk about invalidation. This is just the point where your setup is no longer valid. If price gets there, your idea is totally wrong. Now, this is just a simple, no, I'm not going to complicate things in this video. Now, let's say we are having a series of higher highs, higher lows, higher highs. Now, we are expecting that price should come into this place and give us a higher low. Price should come into this place and give us a higher low, then push to the upside. And price comes into this place and violates this demand zone here or this higher low here and closes, breaks this demand, this higher low and closes with a candle here. We say that this trend is now invalidated. This is now invalidation. This is where you can say your trend is now, your trade or your setup is now invalidated. So knowing where to place your stop losses, to place your trade is a skill. Is a skill on its own because stop losses are placed on strategic places. You can't just start guessing where you place your stop loss and the rest. This is something that has been working and it will still be working. Let's talk about protected highs and protected lows. A protected high or a protected low is that low that broke structure, that last candle that's before we can see a break of structure to the upside. Let's say we are going on an uptrend, your higher high, your higher low, your higher high, your higher low. Then this is your higher high and your higher low. Then we have another higher high. Now, the last candle, the last low that created a broke structure above here, this is your protected low. It is expected that price should not break this low to validate your trend. Understand? Once price breaks this low, that is your protected low is now invalidated because we have a relationship between protected lows, protected highs, and invalidation zone. Now, let's say this is your break of structure. This is a break of structure. This low is now your protected low. Once you are placing your stop loss should be below this protected low, regardless of your entry. You know, one problem some traders do have is that they want to make high risk to reward, forgetting the fact that their stop losses should be at a protected low. Some traders will end up placing their entries here, and in a quest to make a high risk to reward, they want to place their stop losses. Yeah, sometimes it works for some traders, but for me, this is the way I trade. I always want to place my stop loss at a protected level so that once price comes here, we expect that, you know, this is a smart money. I trade SMC. So we expect that buyers will come out and defend this low here and take price to the upside. Now, once price breaks this low, and closes with a candle, this low here is, your trend is invalidated. Now you should just pause or reanalyze your chart to see what happens, or you can just leave the market or leave your system or leave your machine and come back next day so that you can know the next direction of the market. Now I will have to go into the charts so that we can have a fast example. I don't want to waste time in this video. I'll be giving examples in the chat. This is BTC. I'm using BTC as a reference point. I will talk about your protected lows and your protected highs. Now, looking at this chart here, you can you can see this is a break of structure here. This is your break of structure, your BOS, and our last low or a last high, for this is for protected highs now, a protected high. Now the last high that broke this structure here is this high. This is this candle high, which is this candle high here. Now, no matter your entry, regardless of your entry, your SL should be above this area here. Sometimes price might not come into this place totally, but what is the essence? What if price decides to come into this area and swim inside your demand zone? You know that all these zones here, a demand is a zone and not just an area or a line in the market. So sometimes price might decide to swim inside your demand zone or your premium level before it starts dropping. Now, this is a last low that caused this drop to the downside and caused a break of structure. If you are placing your trade here, your entry, this is your entry, and now you place your entry at this point, your stop loss we are selling, your stop loss should be above that invalidation zone. This is the way I trade, and this is what have been working for me. Then I'll target 1:3 or 1:4, depending on my rule and my risk to reward. So this is just now. And another spice is to add up, or should I say characteristics to add up to identifying a protected level, is that protected high or that protected low should at least sweep a candle high or a candle low. You see how price swept this candle high here? See how price swept this candle high? This is liquidity. I will label it as X. This is it has swept this candle high and closed inside this candle high. This shows you that this high is now protected. Now you can now look for premium level, depending on the way you trade. You should trade premium levels, or a supply level. But this is how I trade. This is my supply zone. Now I'll be expecting price to come back here. My SL should be above this area. Now let's look for another protected low. There's something. Okay, now once price breaks this high, breaks this zone, this trade is automatically invalid. Okay. Now let's look for a protected low. But this is an example of a protected high. You can see your sweep of liquidity, a break of structure. This is your last candle that broke that structure. Now your stop loss should be at that invalidation point. This is another example for a protected low. Now you can see this is a break of structure. We had a break of structure, or should I say a market structure shift. A market structure shift. But before that, let's say something here. You can see that this is another break of structure. We had another break of structure since we've been selling from here. This is another break of structure. This is your supply zone, or should I say this is your protected level here, your protected high. Now you can see, and you might decide to place your trade here for risk entry traders that might decide to place their limit entries here. You see how price came into this supply zone and invalidated it and closed with a candle. This is your protected level here, and price closed with a candle here. Now you can see that this trend now is no longer interested. If you are conversant with price action, you know that this trend now is no longer interested. This price now is no longer interested in going down further. It has shifted from a downtrend to an uptrend. This is just an example of invalidation. Price has invalidated this zone, and whatever you are doing, you just have to stop. If you are selling, you just have to stop and automatically know that price has changed direction. Now, for this part, now you can see that this is a market structure shift, or should we say a break of structure. Okay, it was going down. We call it a market structure shift. Now, the low that caused that market structure shift, the last low that caused the market structure shift is here. Now, this is your protected low in alliance with breaking this or sweeping this candle low here. You can see how price swept this candle low and closed above it. Now, your demand zone or your discount zone, once you place your entry at your demand zone or your discount level, your SL should be below that protected low. whatever you are doing, regardless of your entry, your SL should be at that protected low. Once price breaks that protected low, your trade is invalidated. It's no longer valid. Let me just give an analogy. Your protected low is just like a pillar that holds a house. But once that pillar breaks, it has been invalidated. That is, your invalidation is when that pillar breaks. Okay, so let's say this is a pillar that holds this trend. Once this pillar is broken, this pillar is broken, just like this, and closes with a candle, the trade is invalidated. So this is where I place my stop losses. I place my stop losses at invalidation levels, whereby if price breaks that zone is no longer, that trend is no longer valid for me. Now let's see if I can see more trend examples of protected highs and protected lows. Okay, now you can see this was as of last week. I was able to trade this pair, and some of our big traders. You should learn how to learn from experienced and big traders. Learn where they place their stop losses. You can see they don't just place their stop losses random places. Their stop losses are in strategic places. Now, this is an example of a protected low. A protected low. You have price breaking this low here, sweeping candle up this high, and let's say this is a break of structure. This is on 4 hours, BTC 4 hours. This is a break of structure to the upside. Break of structure to the upside. Then the last low that caused that break of structure, or the last candle low that caused that break of structure, is this candle here. And you can see it has swept this candle low and closed above. So this turns out to be your protected low. Now, once you've placed your entry, some persons place their entry here, and their SL was, some of our big traders, I was able to go through some of their charts and the way they trade and the way they place their trade. Some place their entries at this place, at these levels here, still placing their SL at a protected level. No matter what price does, it should not exceed this place. If price exceeds this level, that is, our trade is invalidated, and my target 1:3. Some of them have not hit TP. They are still on the journey to hit TP, to arrive to our TP levels and other stuff. So this is why some place their entries at this place. This is actually where I placed my entry. I was able to take an entry from this place, still placing my SL at the invalidation zone, this protected level. That is, if price should break this my level, I will be out of this market, and I should know that my trend has changed. So if you don't know where you are wrong, you shouldn't be in a trade. Okay, if you don't know when you are wrong, or when price is no longer interested in a valid or interested in a trend, you should not be in that trade. That's just it. Smart traders define their invalidations first. And guess what? That invalidation is usually sitting at the protected high or the protected low. The protected low, the levels that are holding trend together. So these are just levels that are holding trend. This level, you can see this level, these levels here, they are the levels that, okay, this is another example. You can see price coming to this place. This is your break of structure. And you can see that this candle sweats here, set this candle high, this candle low here. And this is your protected level. If you are placing your trade here, your SL should be at this level, below this protected level here. If price should break that level, that is, it is invalidated. Then you can target your 1:3 or 1:5, depending on your rule. And this is just a practical example of how to stay in the game, and you should avoid all this early exiting. Or sometimes you can see price you are looking to take the highest risk to reward, or you're trying to paint your chart very neat, or you are trying to prove to people, you should just learn to place your SL at invalidation zone. Imagine someone placing a trade here and their SL at this place. You just have to learn how to place your SL should be at the invalidation zone and avoid being afraid and other stuff. Once your SL is in a strategic place, I assure you that you have all the confidence that once with also managing your risks and other stuff, you just have that confidence that this trade should not pass this place. But once it does, my trend or my sector is wrong. That's just it. That's just the simplest. This is just a simple way to trade with peace or calmness. And that's the way I trade. And this has been working for me. And this will work for you if you backtest this thing. You can go back to your chart, backtest it, and see that it is working. We have protected levels that you should place your SL and protected highs and lows that you should place your SL. Once those levels are broken, you are wrong. So go back to your chart, learn, backtest, forward test, so that you gather more data and face markets with confidence. Thank you for watching and see you on the next one.